In the days since the collapse of Silicon Valley Bank, gold and precious metals have seen absolutely massive price increases, and many dealers have completely sold out of their inventory, reminding us that during times of uncertainty and financial chaos, nothing is as good as gold. Unless, of course, you want to count the digital gold known as Bitcoin, which has experienced almost triple the percentage gains of gold over the last few weeks. As the banking system continues to struggle and citizens look to protect themselves from continued uncertainty, a flight to safe haven assets is only natural. But is Bitcoin really as good as gold? Hey everyone, and welcome back. This is the Part-Time Economist, and in today's video, we are talking about the similarities and differences between gold and Bitcoin as so-called safe haven assets. Now, before we start the video, I do want to say this is not financial advice. Please do not make any kind of investing decisions based on what I say here today. This is simply my thoughts, my opinions on a subject that I find interesting. So with that being said, we are definitely living in some interesting times. On March 10th, Silicon Valley Bank had its massive bank run, a bank failure, and really aligned with the timing of that, we saw absolutely massive price increases in the price of gold. You can see here from this chart from Kitco that right around the time that bank is failing, gold prices have absolutely massive percentage increases. And this is even more dramatic for an asset that is traditionally stable. So you've probably heard this analogy that a gold coin retains its purchasing power. The analogy says that basically if you had a gold coin back in the Roman times, you could get a really nice wardrobe. And even though we have seen different empires, we've seen different styles of clothing, today if you had a 1 ounce gold coin, you could still get a comparable quality wardrobe, appropriate obviously for the time period, right? Suits instead of robes, stuff like that. But the idea is that the gold coin preserves its purchasing power. And when things are collapsing all around us, that's what many people look for. So you can see this narrative of gold as a safe haven asset has really been bolstered by the failure of SVB and the other banks that are kind of on a shaky foundation. But if we go beyond gold and look at more safe haven assets, we see that Bitcoin is traditionally offered as a form of digital gold. It is purported to be a safe haven asset. And the chart here aligns with that narrative. We can see that just as with physical gold, around the time that SVB starts to collapse, we see massive increases in the price of Bitcoin, even more so than gold. Now, I want to take a quick pause here and cover a couple things. You could say the same for other cryptocurrencies. I think I was looking at CoinGecko and it looked like ETH had some pretty nice price appreciation as well. The reason that I'm talking about Bitcoin in this video is because out of all the cryptocurrencies, number one, it's the most well known, it's the original, and it's really the only one that is kind of pitched and offered as a safe haven asset, right? Other cryptocurrencies may have a fixed supply, they may have a lot of things that are similar to a safe haven asset, but as far as I know, Bitcoin is really the only one that is offered to fulfill this role, right? Kind of the digital gold narrative, which is why I'm doing the comparison in this video. It's not an endorsement of Bitcoin. If you have another favorite crypto, you could go through a similar comparison process. But regardless, we do see some pretty nice appreciation in Bitcoin, which leads many people to say, which of these is the better safe haven asset? And as someone who is not a financial advisor, I am not going to tell you which is best, but I am going to share some of the considerations that I would think of when I'm comparing these two assets, because in some ways, they're similar. In some ways, they are completely and totally different. So let's start with the most obvious comparison. If you want something physical, something to hold, something to put in your pocket, something to bury in your backyard, gold isn't just the winner, it's the only horse in the race, because Bitcoin is completely a digital asset. It simply does not exist in the physical space. So you want something physical, gold is really your only option there. You might have seen these little gold Bitcoin on the internet. Unfortunately, those are not real Bitcoins. So gold being a physical asset can be good in some respects. However, the disadvantage here is that the fee structure for owning, buying, selling, trading physical precious metals is absolutely very, very high. If you're buying precious metals or selling them to realize that price appreciation, you are going to get hit with some massive fees, starting with the difference between the price of gold and what you're actually going to pay to purchase a gold coin. If we look here at this screenshot from APMEX, which is a really big precious metals dealer in the US, the current price for gold was about $2,000 per ounce. But to get a 1 ounce gold coin, you would have to pay $2,179, which is 9%. So 9% of your purchase isn't going to the asset itself, but rather to that spread, the difference between the price of the metal and the price of what you're having to pay to get that coin. Now, when you sell your gold, you might sell it back at only the spot price, or you might get a little bit of a premium, but still, 9% is absolutely huge, and that's not all. Because when you buy, some companies will ship it to you for free, some won't. But when you sell, you're also going to have to pay that shipping fee. As you can see here, it's estimated to be about $50. Now, if you take it to a local coin shop, obviously that fee structure might be a little bit different, right? There's going to be different premiums. Obviously, you're not paying shipping. But in general, speaking in the general sense, there is a lot more fees associated with physical precious metals than there is going to be with Bitcoin. So just something to keep in mind. So now that we've talked about this absolutely massive fee structure for physical gold, let's talk about transaction fees and trading fees when it comes to Bitcoin, because there are fees with Bitcoin just as there are with gold. However, I think you'll notice that the fees with Bitcoin are considerably less. As I'm looking at this chart, it takes about $3.27 US cents to make a Bitcoin transaction. Now, that is to take Bitcoin off of an exchange and bring it to your wallet, or to send from your wallet to an exchange to sell. If you're just keeping it on an exchange, which is generally not recommended, but if you're doing that, obviously you would not have to pay that fee. You would simply be responsible for the trading fees, which according to this Coinbase article can range between 0.05% and 0.05% and 0.6%. So less than a percent trading fee compared to that physical gold, which we're looking at around 9%. So obviously the fee structure for Bitcoin is going to be less than physical gold. But let's suppose you don't really want to hold gold itself. What if you're looking at an electronic form of gold? Well, lucky for you, there are these things known as gold exchange traded funds. Now, these are all set up a little bit differently. Some of them will invest in gold futures. Some of them will actually purchase gold bars and put them in a vault somewhere, and your share essentially represents a portion of the ownership. But overall, what these exchange-traded funds do is they track the price of gold with something that essentially trades like a stock. So it's not an exact comparison, but think of this as a stock representing a certain unit of gold. The advantage here is that you get exposure to the gold price. However, you don't have to deal with taking physical possession, storing the gold, paying those shipping fees. You're essentially just buying a stock that tracks the price of gold. Now, that is a decision because gold has two options, whereas Bitcoin only has one. Bitcoin, you only get the digital version. With gold, you can pick. Do you want the digital ETF or do you want the physical gold? Obviously, advantages and disadvantages there. Physical gold, if the world completely collapses, well, you still have your gold coins. I don't know how much they'll do for you, but you'll at least still have them. The digital stuff, If you're worried about a banking collapse, if you're worried about the implosion of the financial system, you might also be concerned about that gold ETF, right? If the banks are going under, maybe something happens to your ETF. On the flip side, if you're thinking that it's just going to be a moderate banking crisis, that things are going to get bad but not complete end of the world, then the digital form of gold, the ETF version, might give you access to the price appreciation of gold, but with more liquidity, with less fees, everything like that. So where does that take us? Because I know we've talked about a lot of stuff. Gold has two options for you. You can take physical delivery, which typically has higher fees, or you can purchase the ETFs that are essentially stocks that track the price of gold. Bitcoin, on the other hand, is only digital. So there's a little bit of a difference there, but when it comes to actual performance, when it comes to the characteristics of the assets, they are somewhat similar in that they both have a relatively fixed supply. They are scarce, but again, there's a difference here. We know that Bitcoin, there will only ever be 21 million Bitcoin that are ever mined. With gold, there's always the possibility of exploring the ocean, finding new gold, finding gold on asteroids, right? And historically, there has been a limited supply of gold, but we don't know that that will continue into the future. At the same time, gold has a lot longer track record than Bitcoin, right? Bitcoin might be around 20 years from now, but who knows what it will be worth? Who knows what gold will be worth? And that's the point that I'm trying to drive home. The past performance that we have seen with gold, with Bitcoin, with really any asset isn't a guarantee of what it will do in the future. At the end of the day, it's up to each of us to make our own investing decisions and do our own research. Part of that research is understanding the characteristics of the asset itself, which is why I'm making this video. Not to tell you which is better or which is worse, but to tell you some of the characteristics of the asset so that you can think what this asset does versus what that asset does. If you're looking for something to hold in your hand, something that's physical, well, now you know that gold, physical gold, offers that. If you're looking for something that has a 100% fixed supply that will not increase, you know that that is something that Bitcoin offers. So doing that education, understanding the characteristics of your asset is very important before making any kind of decision. As always, I do appreciate you watching the video. I hope you found it useful, and I'll see you next time.